Hi, hope all is well. Kane again. Let's talk about what's happening currently in the real estate market based on articles from the CBC News and Better Dwelling. The Toronto Regional Real Estate Board TRREB anticipates a 12% increase in home sales for 2025, approximately 76,000 properties expected to change hands. Lowering borrowing costs are poised to improve affordability, leading to heightened activity in the housing market. TRREB projects the average selling price will increase by about 3%, with single-family homes likely experiencing the most significant price growth. Jason Mercer, TRREB's chief market analyst, predicts increased transactions during the 2025 spring market, but warns that economic uncertainties such as trade disruptions could temper the positive effects of lower mortgage rates. Competition in the housing market is already intensifying, especially for homes priced around $1 million. Devell Morrison, a broker with Bosley Real Estate Limited, notes that buyers are acting quickly in this price range. Above this threshold, activity is slower but still present. Morrison advises clients to take advantage of current conditions as rates remain low and prices are expected to rise. She cautions against waiting. Hesitation could lead to higher competition and escalating prices as more buyers enter the market. In January 2025, the Greater Toronto Area recorded around 3,850 home sales, a 7% drop from previous year. However, the average selling price rose slightly to $1,040,000, marking a 1.5% increase year over year. Semi-detached homes were the only property type to see sales growth, with a 3% increase, while condos experienced the largest decline at 12%. Listings in the GTA surged by nearly 50%, indicating a growing supply in the market. In Toronto itself, sales dipped 5%, while the surrounding areas saw a 10% drop. Mississauga's real estate market exhibited a notable rebound in January, with new listings surging by 160% compared to December. The average property priced in Mississauga rose to around $1,050,000, with detached homes experiencing the largest price growth at 14%. Freehold townhomes led the sales increase with a 92% jump, although the prices dipped slightly. Condo townhouses and apartment condos also saw rising sales and modest price gains, reflecting growing optimism in the region as the spring market approaches. Meanwhile, Canada Mortgage and Housing Corporation released its 2025 housing outlook, which presents an unusual low growth scenario. This pessimistic forecast assumes that American tariffs will trigger a recession, inflation will rise, and immigration will increase. Despite these dire assumptions, the CMHC predicts higher home prices, a booming immigration trend, and limited GDP contraction. The agency forecasts a 2.6% increase in home prices, reaching approximately $705,000 in 2025. Prices are expected to stabilize in 2026 before surging by over 5% in 2027. The CMHC's outlook has drawn criticism for its optimistic portrayal and a recession's impact. Analysts have questioned the agency's assumption that higher unemployment would attract more immigrants and drive up housing demand. Historically, economic downturns have slowed immigration and tempered housing markets. The CMHC forecasts a minimal economic contraction at just 0.5% of GDP in 2025, contrasts sharply with predictions from the banks and the Bank of Canada, which anticipate a more significant downturn if tariffs were implemented. The agency also suggests that the housing market would rebound rapidly after a brief slowdown. It expects pent-up demand to push prices higher as the economy stabilizes and immigration resumes. However, critics argue that these assumptions overlook key economic principles, such as the risk of stagflation and scenario involving stagnant economic growth, rising unemployment, and persistent inflation. In such conditions, the housing market would likely face challenges rather than a robust growth. Over the past few years, the CMHC shifted its focus from affordability to promoting housing development. This change has raised questions about the agency's priorities and the credibility of its forecasts. While the CMHC once advocated measures to address affordability, it now appears to emphasize market growth, even in scenarios where economic fundamentals suggest otherwise. Critics have highlighted the inconsistencies in the agency's messaging, noting that internal discussions often contradict its public statements. The Canadian housing market in 2025 is expected to be shaped by a mix of optimism and uncertainty. Lower borrowing costs and growing buyer interests are likely to drive increased activity, especially in markets like Toronto and Mississauga. However, broader economic risks, including trade disruptions and inflation, could pose challenges. While the CMHC's bold forecasts suggest resilience in the housing sector, they also underscore the importance of cautious optimism and realistic assumptions in navigating the evolving landscape. If you like these kinds of videos, be sure to check out our investors playlist here. Thank you for watching, and until next time.